Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
But what a remarkable up move kicked in the second half of the session, given the fact that we managed to reclaim that 18,800 mark. It's a cool triple-digit up move coming in on the Nifty, and the Sensex also rallied by about 450 points or thereabouts. So it's a 7/10% kind of gains coming in on the frontline indices. If you look at the mid and small cap end of the markets, both the mid cap and small cap indices gained somewhere around 0.5% or thereabouts. So the outperformance really coming in on the frontline indices in today's session. What really did well today was, I think, the realty pack that was leading from the front. You had the PSU banking pack also staging a good up move, and almost all the sectors were in the green, barring the FMCG as well as the energy indices. If you look at some of the top Nifty gainers, of course, it was the HDFC group of stocks, that staged a very smart uptick in the second half. So HDFC Life, top gainer, up 5.5% or thereabouts. Apollo Hospitals, JSW Steel, HDFC, SBI Life and SBI were among the top Nifty gainers. On the losing end, some of these FMCG names like Britannia, Tata Consumer not doing well, Eicher Motors, UPL as well as Cipla from the pharma pack not doing all that well. But let's talk about the big news that came in the second half, wherein Deepak Parekh has announced that 1st July will be when the HDFC Twins merger will be effective from, right? So, Yatin, let's talk about that a little bit.
So, the boards of HDFC Limited and HDFC Bank will meet on 30th of June to make the merger effective on 1st of July. And obviously, on 13th July is when HDFC trades last, post which it will get merged into HDFC Bank. And obviously, after this news, there was a lot of excitement. Both HDFC Bank and HDFC led the rally, not only in the market but also on the Nifty Bank with their 1.5% gain. More importantly, we also have one Nifty stock which will get reduced because of HDFC moving into HDFC Bank after the merger. So LTMI, which is L&T Mindtree, that stock also saw a 3% rally on the hopes that after the merger of HDFC Bank and HDFC, it will be one of the most probable candidates to be included in the Nifty. Obviously, there was a tie between Pidilite and LTMI at one point in time, but given the fact that LTMI has a very higher free float, which is one of the key criterias, hence given the fact that the current structure of LTMI meets the Nifty requirements, it will be the most probable candidate. So a whole host of stocks are doing well, and Nifty Bank also, led by the HDFC Twins, did wonders in trade today. In fact, nobody was expecting such a huge momentum in the second half of today's trading session.
That's true, Yatin. In fact, we'll have to see whether or not we will be knocking at those fresh highs when it comes to the Nifty. Sensex already had its turn, but it's now Nifty's turn to make a fresh all-time high, and we'll have to see whether or not that happens in tomorrow's session, given the fact that tomorrow's holiday has been pushed to Thursday. So we'll also be having the Nifty weekly as well as monthly expiry in tomorrow's session. But on that note, let's talk about the stocks that are on our radar this afternoon, starting with Axis-Cades. Now, this is one stock that has rallied somewhere around 285% in the last 1 year. In fact, it has completed its refinancing of its existing debt of somewhere around 210 crore rupees or thereabouts, and that will reduce its finance in fact, interest costs by somewhere around 400 basis points per year. So that has come as a big boost for the stock. The stock is, in fact, has been hitting 52-week highs for the last 3 sessions. It's a leading end-to-end technology and engineering solutions company, and it had acquired a company called Mistral Solutions back in December 2022, because of which it had, borrowed funds, and it has refinanced some debt from there. So Mistral is basically a leader in semiconductor, embedded electronics, defense and product engineering capabilities. The acquisition was actually initiated in 2017 and was executed over 4 phases and at a total cost of 296 crore rupees. Refinance, as I mentioned, refinancing will bring down the interest cost for the company, and it will also release a substantial amount of cash, in terms of reduced interest cost. And when you look at the FY26 vision shared by the company, it is aiming to grow its revenues by 2x, in fact double its revenues and treble its profit growth. In fact, and also wants to become net free by FY26. So all in all, things going well for the company, but the fact that it's a low volume stock, that makes it a little more difficult to take a bet on this stock. But all in all, it has been doing well over the last 3 sessions, and over the last 1 year, it has rallied somewhere around 285% or thereabouts.
Clearly, and this is one stock you need to keep on your radar. And the other stock which is on my radar is Star Health. Now the stock was up nearly 4.5-5% in trade today. A lot of volume momentum today. We have CLSA, which has a buy rating on the counter with a target of 700, which means that the current market price provides a 30% return opportunity for people who believe the CLSA report, obviously. Now, the company has multiple levers for growth according to CLSA. They have a very strong market share, and also if you look at the company, they are targeting more than 20% in the premium growth. And also if you look at the competition, that is supposed to be sideways, given the fact that the regulator is also working on a composite license, which give health insurance companies also opportunities to cross sell life insurance products. So Star Health, being in the healthcare industry and in the health insurance segment, they have really done phenomenally well. But when it comes to the composite license, this small cap mid cap company stands to gain a lot. Obviously ace investor Rakesh Jhunjhunwala and his family own a significant chunk in this company and are the promoters of Star Health.
I think somewhere around 17%, both Rekha and Rakesh Jhunjhunwala together own that much stake in the company. So that's one stock you need to look out for. The other stock on my list is PB Fintech. Now this stock has been rallying. In fact, it's rallying for a second day on the trot. The company had kept its analyst meet, virtual analyst meet for the first time since its listing. In fact, the management commentary coming in was pretty upbeat, and we in fact had an IFL report yesterday. In fact, the brokerage had a buy rating on the stock with the target price of 750 or thereabouts, and today CLSA has come out with an outperform rating on the stock with the target price of 720 rupees or thereabouts. Now CLSA has said that the company has reiterated its guidance of breaking even in FY24 and reporting a PAT growth of somewhere around 1,000 crore rupees by FY27. And of course, aside of that, Morgan Stanley also expects PB Fintech's margin to cross the 20% mark by FY27, and it believes that the higher renewal business is something that will lead to improved profitability. Now, Yatin, we know that a lot of these internet companies have seen the tide turning when it comes to share prices because of the fact that they have provided a color on as to how and when they will turn profitable. So they are featuring on the buy list of a lot of these fund houses, and they've come on the brokerage radar of late. So aside of the fact that the stock is up 60% on a YTD basis, every other day we hear mutual funds increasing their stake in this counter. So this is one stock that is on my radar this afternoon, and let's see how it pans out from here.
Yeah, and keeping it with the letter P after PB Fintech, one of the stock on the radar is Piramal Enterprises. Now today, Jefferies has raised the target on Piramal Enterprises to 1025, which means from the current market price there could be a 10%, 15% kind of a upside. Now the stock of Piramal Enterprises trades almost 0.6 time price to book value, which means that from here on there could be a potential upside to the share price. Obviously, recently they sold shares in Shriram Finance and their liquidity and capital position has improved quite a lot. Talking about stress and bad loans, so management does believe that things are under control. More importantly, the recovery in profitability should be gradual due to elevated operational expenses, which Jefferies believe could be elevated because of bad loan formation. But on an overall basis, given the fact that the valuations are correct, probably there is some growth capital which is now been passed to the balance sheet because of the sale in Shriram Finance. Could give Piramal Enterprise some short-term momentum. And today also the stock closed near the day's high, given hopes to investors that the retail portfolio should start growing aggressively versus the earlier strategy of a wholesale come real estate book.
Right, Yatin, and the 4,800 crore rupees that they have raised can be put to good use, given the fact that they can use it to repay their debt. True. Or for organic growth, as well as for any kind of share buyback or dividend announcement as well. So we'll see how they go about utilizing the funds that they have raised via the stake sale in Shriram Finance. Well, with that, I think we've come to the end of this edition of Closing Bell. Of course, we will be seeing you tomorrow morning at 8:30 a.m. as the markets are open tomorrow. So tune in at 8:30 a.m. live, and we'll be getting you all the market action. And from Yatin and me, thanks a lot for watching. But for all your other news and financial updates, stay tuned to Money Control.